NVIDIA has been soaring to the moon for quite some time now, and Tom Lee is still bullish on it, and expect more gains to come by year end. Also, I have 5 additional AI stocks set to soar with the semiconductor sector by year end, and I will cover that in this video. And before we start, here's a quick video on Tom Lee's thoughts on NVIDIA.
Softer than expected inflation, and he is seeing more positive signs ahead, and he's sticking with the big names in AI. Tom Lee is here. He's Fundstrat Global Advisors co-founder, managing partner, and head of research, and he's a CNBC contributor. It's great to see you.
Yeah.
I want to start in a little bit different way than normal because Doug just made a really interesting point about millennials and how they're so conservative in their positions. And whether you've experienced this phenomenon firsthand or not, what do you say to those who need to be coaxed into a market that is ever at record highs after a run in stocks like NVIDIA, like we've rarely before seen? I mean, is the water still safe?
I know investors generally aren't comfortable buying things at a high, but if we're mid-cycle, which we probably are, then we're going to be making a lot of new highs over the next 5 years anyways. And I think there's a lot of statistical support showing buying at new highs actually has a better win ratio than attempting to buy at lows.
Well, it's also true that for all of our lifetimes, the stock market has generally gone up. So yes, there are pullbacks. Yes, there are corrections. Yes, there are financial crises. Yes, there are pandemics. But is there any reason to believe that the fundamental nature of the beast has changed for the worse? I mean, I read this research sometimes, I'm sure you've seen it, that says, oh, we're going to have permanently lower stock returns now. 4% a year is the most you should expect and things like that. We've pulled forward gains. I mean, do you believe there's credence in any of that?
I've heard that exact statement about the new era of low returns since 2008.
Right.
And stocks have compounded at pretty much the historical average since 2008. I think as long as there's skeptics out there, that means there's a lot of fuel for upside.
Mm-hmm. So is NVIDIA the thing that you look at and go, well, this could spoil the party, i.e. it becomes too much of a good thing. It really starts to lift into some kind of bubble, draws people into the market, really extends valuations, then we have to clean up the mess.
There's a lot of people trying to top tick NVIDIA, saying that they don't want to own it because it's expensive, but it's a 30 PE stock
Right.
that sells something that no one else actually produces in the world.
The one thing it's not is expensive.
Yeah. So I'd say I'd feel very differently if if we were discounting NVIDIA being larger than global GDP and at 100 PE, and everyone's saying there's no way it can be stopped. But because everyone wants to sell NVIDIA and try to call a top, I actually think there's still a lot of upside.
When I hear anecdotes, like I heard at a fundraising thing the other night about how all the local kids own NVIDIA, what should I think when I hear that kind of information?
Well, it makes sense. I mean, NVIDIA is the largest stock, so, everyone should own it. It's almost like if someone said, I'm selling because everyone owns the S&P. Everyone should own some S&P. It's really a bearish sign when someone says the S&P won't ever go down. And I only hear people saying the S&P's topping right now.
I do remember people saying stocks never go down a couple of years ago. Then we finally had a correction. I think we've had a couple maybe since then. What kind of paradigm are we in now? We hear people saying, like Mark Zandi did, well, the Fed needs to cut because otherwise the economy could take a turn for the worse. We know rates are probably higher than they need to be. Do you need to have a view on Fed rate cuts in order to support stocks continuing to move higher?
To an extent, I think that the big lesson for the last 2 years is the S&P has endured some pretty severe rate hikes. So we know companies are managing this cycle well. If the Fed turns neutral or dovish, that's even more positive for stocks. So I think that the environment for equities still is good because they survived a stress test. It's only bad if the Fed has to raise
Majority of fund managers have to provide a return to their customers other than 5% holding to cash on the sideline. The S&P 500 is up 17% year to date, and that is a 12% difference for those holding on to cash on the sideline. A lot of fund managers are going to jump into NVIDIA and other AI stocks in order to provide a respectable return to their clients. According to Barron, within the semiconductor industry so far this year, NVIDIA has more than doubled, surging 162%, while Micron Technology has surged 68%, Taiwan Semiconductor Manufacturing has soared 66%, Coherent has soared 63%, and Qualcomm added 51%. These AI stocks have been targeting off NVIDIA gains, so I would do a little bit more research and see if they fit my portfolio. It has been a fantastic year for chip stock, and it's largely thanks to the artificial intelligence frenzy. An analysis from Jeffrey said, we believe it's too early to set out the winners and losers in the AI basket yet, but NVIDIA is our favorite. NVIDIA maintains control over the entire ecosystem and is taking more pieces of the pie. Micron, however, was Citi's analyst Christopher Danley's top pick in May 21 report, thanks to the uptick of demand for dynamic random access memory, or DRAM chips. He has a price target of $150 on Micron, which is currently at $130. Last but not least, AMD is making a big push to take some market shares away from NVIDIA. It was just announced that they purchased an AI startup called Silo to help with the shortage of AI experience and skills that they've been experiencing, which is something NVIDIA currently has a monopoly on. This article from Barron is titled "AMD is distant number 2 to NVIDIA." If stock could be a winner anyway, AMD is on a long trajectory and it's been up 1,000% in 20 years compared to NVIDIA 53,000%. AMD is considered the Pepsi versus Coke of the AI industry. According to FactSet's analyst estimate, AMD sales to data centers should hit $12.2 billion in 2024, nearly double last year's. They also expect AMD to have 35% data center revenue growth annually, reaching $30 billion by 2027. As a result, earnings per share can increase to $10 per share from $2.65 from last year's. And for those who are skeptical about a possible rotation out of tech this week, this is what Tom Lee had to say.
Is Tom Lee. He's joining us now, FundStrat. We get critical consumer inflation data tomorrow. I think that last point was important from DataTrek, Tom, which is they kind of made the implication that, you know, from the low to the high of these runs that we've had since 1990, 75% was about what we got before it topped out. I think you would disagree or agree this time is different.
Well, I don't know if peaks and markets are measured by the percentage gains off the lows. We've studied that extensively. I mean, even going back to 1929, no drawdown or bull market bottom has ever been measured by how much it's risen. It's usually by how much of a prior move is retraced. I don't want to be too complicated, but the reason I might disagree that we're topping is there's no signs of euphoria. You know, in the client meetings I've done, and I've done several this week, and the Zooms that I do, and I've done countless Zooms, we find institutional investors are still pretty skeptical of this market move because they view it as concentrated or premature because the Fed is still not cutting, or they think inflation's still a problem. So I think many people cite reasons to be sidelined and actually skeptical. So to me, that's not what you usually see at the top.
Please make sure to do your research before you invest into anything. Don't forget to like and subscribe to the channel, and thank you for tuning in, and see you next time, folks.